Good afternoon and welcome to another VSA Capital Tech and Transitional Energy podcast with myself, Phil Smith, analyst, and I'd like to welcome this afternoon David Scriven, who's our head of institutional sales, as our CEO Andrew Monk is on holiday. So good afternoon to you, David, and how are you?
Good afternoon. I'm very well, thanks, and I hope the likewise for your good self.
Very good, thank you, David. And the sun is shining today, which is a good thing.
That is true. So, on a positive note, Moody's raised their estimates just literally today. I think it came out for the Chinese real GDP to be 5% versus 4% this year, as a consequence of abandoning zero COVID policy. Now, we also saw that PMIs were strong at 52.6, which is a 10-year high, versus 50.1 in January. Now, that positive picture contrasts somewhat with the economies that have already opened up. Germany's economy has already slipped back to pre-pandemic levels. And if Q1 is a repeat of Q4 of last year, I guess we're technically in recession territory. Now, Germany, of course, if you look, does no longer have that potential of the cheap Russian gas. And its powerhouse position in the internal combustion engine is drawing to a close. I think it's right to say that EVs need less higher value added parts than existing automotive technology, which has been a backbone to the German economy. Germany does not enjoy, unlike the ICE, a particular advantage in EV. And I was just wondering, Phil, what your thoughts were, because it's an interesting situation that's evolving in this regard.
Yeah, it is, David, and obviously the transport sector is going through a transition as part of the overall energy transition, in moving from ICE not industrial internal combustion engines. I'll get that right. Onto EV platforms. Germany's a huge maker of car, big international maker of cars, but particularly ones that are internal combustion engine driven, and is having to make that conversion over to EVs. But you'll see that VW have launching EVs, German manufacturer BMW and Mercedes, they're all launching new electric models. But it's a big transition. It's taking time, and in Germany there are a huge amount of people employed in the automotive industry, and particularly on the more the traditional kind of powertrains that go around a petrol and a diesel engine, in terms of the prop shaft gearboxes and all the rest of it. It's different types of systems for EVs. So yes, it could be quite a challenge as they transition and as jobs move around for that. Yeah.
Indeed. Now, I guess one reflects also on those stats for the economy that, in fact, we're not so much the sixth man of Europe, because our economy stagnated. So it's perhaps not quite as bad as has been made out. But perhaps now moving on to the US, I thought it was quite interesting, because in the US, the reversal in the downward movement in the employment cost index and the move up in the prices paid in the ISM has potentially put the Fed in a bit of a bind with these inflation stats that perhaps are a little bit hotter than expected. So their credibility could be on the line if they want to revert to an increase of 50 bips. So maybe, in fact, the reality will be 25 bips for longer. So we'll see how that pans out in markets, and it is becoming, center stage in that regard. But thinking more along the lines of companies, and I'm not going to touch on the ETFs, which I tended to do in the last time we chatted together, and just focus on some company news and wanted to share it with you and your thoughts. But my daughter has been encouraging me to watch The Last of Us. What was a Sony 2013 PlayStation game and a TV show currently being streamed by HBO in the US about zombies. Analysts describe it as possibly the best ever video game adaptation for TV or cinema. Other games titles with TV outings include Zero Dawn and God of War. Now, fascinatingly, Sony has been going through a transformation from consumer electronics to specialist hardware maker and international media giant. Games and music represent almost 50% of operating income. Their anime, which is Japanese film and TV streaming service, has 10 million paid subscribers, and they have the world's largest portfolio of anime. The global anime market is expected to grow 10% per annum and is valued at 47 billion by 2028. Now, Sony's share price is way off the end of its 2021 5-year high, due to concerns now going forward on consumer spending post-pandemic and chip shortages, which might delay the rollout of PlayStation 5. I think Sony is one to have on your radar, as the shares are showing signs of recovery off the 2022 low. Furthermore, on the subject of cloud applications, Salesforce was up 14% after hours as the company has strong results and delivered an upbeat forecast. The company appears to be in tune with its activist investors, for example, Elliott, and their suggestions as they emphasize profitable growth. Operating margins are projected to be 27% in 2024 versus the street of 22.4%, and they're going to step up buybacks. Now, in the background, market concerns have centered on a cautious outlook for cloud infrastructure spending and applications, and the company is experiencing longer sales cycles and has removed its 50 billion revenue goal for 2026. The street thinks more job cuts and spin-offs might be needed to improve profitability. And then moving on, and I perhaps should have mentioned it when I was on the EV theme with Germany and my colleague Phil, I should have perhaps mentioned, of course, Tesla's master plan fell flat last night after the firm failed to offer any firm detail on the company's long-awaited next generation of electric cars. No timing was given on the new Mexican plant, for example, and the stock was off 5% after hours. In the cybersecurity world, CrowdStrike Cybersecurity reported cloud exploitation rose 95% last year, yet cloud computing is held as a secured method of storage. Precedence Research predicts AI cybersecurity will rise from 25 billion next year to 100 billion in 2032. Keep an eye on CrowdStrike. While not profitable, sales are growing and losses are narrowing. The company is FCF positive and has 2.5 billion of cash. The stock is on the cusp of driving through its 100-day moving average. And perhaps finally on my side, and then I'd like your help here, Phil. I'm going to revisit that discussion we've had, and we've talked about AI, and it really has been center stage since we discussed it, and Microsoft's initiatives, etc. Anyway, in the earnings season, references to AI are up 77% from a year earlier, and a number of AI names have rocketed, like Big Bear up 336%. It's staggering. Anyways, NVIDIA has also had a good run, and it's moved to a new business model, selling AI services to large customers and governments, which may put them on a collision course with big tech companies that are its clients. Now, reported Q4 was above consensus, and the street is looking at growth acceleration in gaming, held back by inventory correction from demand from RTX 40 and data centers impacted by CapEx spend by US cloud hyperscalers and lower networking demand, with the ramp of H100 driven by adoption of AI. The stock was off yesterday, but perhaps linked to M&A buzz, as the company has announced a 10 billion mixed shelf offering. But AI is absolutely front and center, and I'd love to share your thoughts on that, and then it maybe segues to Super C.
Okay, well, some interesting ideas to look at there, and on, but you know, in terms of Salesforce, Sony, CrowdStrike, but onto NVIDIA. I mean, NVIDIA now is or certainly in the top 3 semiconductor manufacturers in the world. I mean, actually, chips are made by TSMC, I think, but it designs them. And NVIDIA has always been, you know, around sort of games architecture and graphics processors, was where it's sort of, you know, its foundation was, David, and it's that's graphics processors and the way that the processors work that enables massive processing of data. And you know, for games, that's what's required. But actually, that ability to process data in a way that the NVIDIA processors does lends itself to artificial intelligence, where a huge amount of data needs to be crunched. But NVIDIA's processors, you know, as you point out, are very widely used as well in data centers. They were used quite heavily for, I'm just trying to think now, sort of coin number processing. They work for that, but now increasingly for AI. So on one hand, you know, cloud hardware spend has been weakening more recently, but on the other hand, they've got this fantastic opportunity in AI. So, you know, NVIDIA for sure, absolutely, you know, is one to keep an eye on and to watch. The artificial intelligence, you are right, Dave. There's been a terrific amount now of talk and activity. And I think that's because it's becoming more real. Is that, you know, with ChatGPT and everyone giving it a try, people are starting to see exactly, you know, what could be done from a practical perspective in deploying AI, and hence you know, a lot of activity in the space and growing interest in the space. And yeah, and just quickly on that, you know, a client of ours, Superseed Capital, they're listed on that quiz, tickers ASE. But Superseed is a, you know, Superseed is a feeder funded to Superseed Ventures, and they do seed investments, and they focus on SaaS companies, B2B software, and AI companies. And they just reported fourth quarter, and they had seen they got eight SaaS investments and continuing high ARR growth from them. So the revenue growth from their portfolio holdings, which is very, you know, very good to see. And they were saying that, you know, they've got a holding in AI build. Their software is used for 3D printing and for larger kind of engineering structures. That's in aerospace. But in the fourth quarter, yeah, they saw that I'm just trying to get to the actual ARR growth. I think they had double-digit ARR growth from their portfolio companies. So in fact, it's 21% increase in fourth quarter. So there we are. So that's a corporate client of ours. Yeah.
Yeah. Sorry, I was also going to add, I noticed a couple of other their investments like Jewel, I think, and ThinkTrax. They had even stronger ARR to the stat that you just mentioned. In other words, it's sort of more like 50% or so for Jewel. So very encouraging.
Yes, it is. Is it? Look, it's a good way of playing very early stage technology investment. That's Superseed Capital. So do have a look at that one. I think just moving on, David, to the couple for me on the renewable, you know, transitional energy, renewable energy space. I've just seen an announcement apparently that Mazda, who are UAE based, big investment funds, they're pledging to invest £1 billion in battery storage projects in the UK. And our regular listeners will know that we follow activity in the battery storage space very, very closely. So that's encouraging to see that. And on the need for battery storage and the ability to run your grid completely on renewable energy, there was a report from Imperial College which has said that the UK grid ran 100% clean electricity for 25 hours in December for the first ever time. You know, and included in that is biomass, hydro, wind, solar, and nuclear. So you know, you can see now how the sort of density of renewables in the UK grid is increasing. So that was quite good to see, actually. Moving on to the tech sector. It is, yeah, David, it's pretty slow in terms of results reporting at the moment, but I think we will see as we go through March, a lot more companies going to be reporting, and that's starting next week. So we'll have a lot more to discuss. But here's one that this is our, you know, one that I've been looking at for the year ahead. We discussed in December. I think this is a good company, but investors need to do their own research on things. It's not one I cover, and that's Centralnic. The ticker is CNIC. CNIC, and they reported their full year results. Now, this company is all about about online marketing. They are a huge distributor of domain names. So, you know, if you want to get set up with a website. This is the company to kind of go to if you want to develop e-commerce. This is a go-to company for that. And they have all the marketing tools for e-commerce. And they just reported that they'd seen their revenue up by 77% in 21 to 22 period ending to $728 million. The operating profit was up from 12 million to $33.5 million, so increasing a lot more than the sales growth, which is good. Profit before tax from more or less what was $1.5 million last year to $15 million now. So an encouraging move into PBT profit. I think it's just basically there was a small loss due to a higher tax charge. But it's the growth in this company that is very, very encouraging. And at a time where, we've seen overall perhaps sort of e-commerce activity slowing after the complete boom during the COVID period. But these guys who are serving the web industry, as it were, are continuing to grow. So that is Centralnic. So we think that's worth having a look at. Moving on to a very different sectors, Melrose. David, I'm sure you've come across Melrose in the past. The ticker's MRO. Market cap is 6.3 billion. They had their full year to December. Melrose, very, very much engineering orientated, and they are in sort of aerospace, automotive, powder, metallurgy, and other industrial applications. And the aerospace involved in civil and defence airframes and engine structures. Automotive, they have complete driveline technologies, and this was going back to what we said about the German automotive industry. You look at Melrose, and it acquired GKN, and GKN have their own electric motors, electric transmission platforms, so whole EV platforms there. And they, in reporting their results, have said that the aerospace business is going very well. And they saw revenue up from 2.5 billion to just under 3, profits up from 112 million to 186 million, and operating profit margin, something we'll look at very closely, up from 4.4% to 6.3%, a very positive outlook. And the automotive business, which has been renamed Dowlais, Dowlais, and they saw the revenue grow from 4.7 million to 5.2. Op margins up from 5.4% to 6.3% on an operating profit of just under 260 million to 330 million. And it's said that new business wins in automotive were over 5 billion for the year. So a strong book to bill. They've seen a strong book to bill ratio, and Melrose already announced that they're going to spin off under the Dowlais name, GKN Automotive and GKN Powder Metallurgy, and they've noted the terms to they're doing a 1 to 3 share consolidation before completion of the demerger for shareholders. So that was Melrose. So that's automotive and aerospace. Very encouraging news there. Moving on to Rotork, which ticker is ROR, 2.8 billion market cap. And they are again, it's engineering and technology, and Rotork provides control solutions, so things like electric actuators, process control actuators, gearboxes, etc., pneumatic valves. But their equipment and their engineering goes into the oil and gas industry, water, wastewater, chemicals, and processing. And they had seen their order intake up by 11% year on year, and they saw all 3 of their key divisions booking higher orders. So that's chemical, process and industrial, and oil and gas were all strongly ahead. And this, in terms of the annual results, this translates into sales up by 11% to 680 million, op profits up by 11.8% to 143 million, and margins down a tiny bit from 22.5%, very strong operating margins, by the way, to 22.3%. And they commented here they're managing cost inflation. Obviously they're buying in a lot of parts that they're putting together, and that they're being able to raise prices twice during 2022. So I thought that was quite interesting from Rotor.
Indeed.
And then a little bit more technology, smaller one now. And this is Quartix, David. I don't know if you've come across them before, but Quartix, this is vehicles tracking systems. So they are software and the systems, and they're a big supplier into commercial vehicles. And this is where commercial vehicle, transport companies want to manage their fleets, want to know how the vehicles are being driven, where they're being driven to, and to tracking them. And they've got installed units now, 235,000 installed units. They get subscription revenues from transport companies for these. They've reported their results, and they had said that during a 4-year period, revenue was up by 7.9%, 27.5 million. And that, just look at their profits, up by 2.5% to 5.6 million. But free cash flow is something we look closely at. What's the actual cash generation versus profits? That was up quite strongly by 16% to 3.8 million. So not a bad set of results actually for Quartix. And then a final one for me, David, and this is a smaller company. This is Beeks Financial Cloud. Not one I've come across before, but they basically provide cloud computing, connectivity, and analytics for the financial services industry. They're based in the UK. They have a network of 27 data centers. I guess I don't think they're using all those. They're accessing those data centers rather than owning them. But it gives them scale in the market, in terms of providing services. And they said that their first half revenue was up by 35%, 10.4 million. And the committed recurring revenue is up by a similar amount, 35%, but that's to 21 million. Looking ahead, gross profits up very strongly, 47% to 4 million. Just looking at their cash flows again, cash flows up 46% to 3.7 million. So again, that's not one I've come across before, but maybe one that our listeners might want to look a little bit further at and do some of their own homework and see what they think. So David, that is it from me. So sorry for our listeners this week that we don't have too many results to talk about for the UK. But David, thank you very much for your inputs on the US and the wider markets. So thank you, David.
Pleasure.
And if anyone has any ideas that they'd like us to discuss next week, feel free to send them in to us, or any other subjects you want us to discuss. And so with that, I'd like to thank you all for listening in. And David, thank you again for your kind assistance this week.
Thank you very much.